from ShortMeTina.com with my daily recap. Today's Tuesday, so I want to say happy Tuesday. Before we jump into a recap of the overall markets, I would like to welcome you in typical fashion. So, if this is your very first time tuning into a ShortMeTina video, do us a solid, do us a favor, drop us a comment in the comment section. Make sure that you are subscribed if you are returning. You know what I'm going to say? I'm going to say, I know you can be doing so many things right now in this moment, but right now you choose to spend it with me, and for that I am grateful. All right, so we got a few things to cover. I'm going to try to keep my videos short, so let's jump into a recap of the overall markets. Anyway, right now on your screen is the S&P 500, the SPY daily chart dating back to 2017, so that's about 2 years worth of data, and the market continues to trek on, right? Continues to, once again, hit another all-time high. So the SPY today went as high as 314.28. Never in history has it ever printed that number. So it seems, especially after breaking out of this 293, 295 resistance level that I have been so keen and focused on for the past few months. And if you want sort of like confirmation of that, you can listen to any videos I did around, let's say, July, August, September, October. I've been really keen and super laser focused on that 293 to 295 level, which is resistance. Again, going back to 2 years, you can see that the market has not really traded up above that level in any meaningful way. And the times in which we've actually gotten above that 293 to 295 level, like we did in June, we saw that 6% correction. We tried once again in September, once again got that 6% correction, and then we tried in October, and it seems as though that was the charm since then, or I would say since early October, when we bottom out in the low 280s, the market has rallied something like 10%. So it is great to be a bull. So if you're a bull, congratulations, you're up about 10% in a month. But if you are like some folks that have been buying the market since December of 2018 for the past year to date, I think the SPY is up over 20%. You cannot argue with those returns. Anyway, we're sitting here slightly under 314. And for me, like I've indicated before, I think we're going to run into a little bit of resistance once we get to that, once we get to that 328 to 330 mark. So I think at this point there might be, not saying there's not going to be pullbacks, there's always pullbacks. You see it here, here, and here, but I think from here until 328, I think it can be quote unquote relatively smooth sailing, and I probably should not have said that. But anyway, so that's about another 4 or 5% of upside. But for me, I'm not necessarily looking at the finish line of around 328 to 330. I'm paying attention to, once again, 295 to rather 293 to 295. If we can stay above those levels, I think things are okay. What else? And then we have the IWM daily chart, also going back to 2017. I mean, you can't really argue with the price action of the IWM for the, well, obviously you can argue with it, but yesterday, nice, clean, powerful breakout again. I've been laser focused, similar to this, I've been laser focused on that 160 level with the IWM. We finally broke through after about a year, and it was a fierce breakthrough. We went as high as 161.83, followed up today, going as high as 162.54, once again making, actually no, not all-time highs with the IWM. IWM were a bit off from all-time highs. But anyway, highs if you consider the past year or so. So I want to say not only was I focused on that 160 level, it seems as though a lot of other investors were focused on 160, because the minute we broke through, you can see the market sort of like shoot up. So we closed at 161.65. Today's low clocked in at 161.29. So we closed relatively close to the low of the day. You know, when that happens, I usually say there might be a slight pullback in the market the following trading day or the following trading week. Short week due to the Thanksgiving Day holiday, but nonetheless, right now for me, the IWM is showing relative strength. And even if we pull back to that 157, 160 base, as long as we can hang around there like we did all of November, I think we should be fine. I think, right, the IWM can at minimum retest its all-time high of 173.39. So still a bit of upside in my opinion. Gotta love it. What else? And let me do a follow-up on ticker SRNE. It's a daily chart. Let's just focus in on price action the last 2 days. And what I indicated yesterday, as I typically do with a lot of my videos, especially when it comes to these small cap runners, is you always want to pay attention to how the stock closed the prior day and how it opens up. And that should tell you what the stock wants to do. So to use ticker SRNE as an example, I'm pretty sure in that video I said, well, you want, despite the close being relatively bullish, right? We closed, this is yesterday, not today. So yesterday we went as high as 319, we closed at 311. I said, despite that relatively bullish close with confirming volume, you want to pay attention to what happens in pre-market and how the stock opens up today. So today we actually opened up at 301 below yesterday's close, and that's always an indicator that your stock is going to pull back, and that is exactly what it did today when it pulled back to 282. So we got a bit of a bounce, right? Closed at 296. The high of the day clocked in at 311. So we closed relatively well, I wouldn't say relatively close to the high, but definitely we're off of session's low of 282. So similar scenario. What you want to do heading into tomorrow, if you're long, looking to get long, wondering whether or not you should sell your shares, you want to pay attention to how the stock opens up. So if we open up below 296, that's not a good sign. If we open up above, there's a chance that the stock might actually run, or at least put up slight gains for the day. So that's my take or update on ticker SRNE. What else? All right, and a really quick update on ticker ZNGA Zynga. Someone asked me whether or not I've actually not someone, but I've actually had a few inquiries in terms of whether or not I am still long and bullish on Zynga. And the answer to those questions is, or are, yes and yes. Yes, I'm still bullish. Yes, I'm still long. Now, you have to understand that we've traded in and out of Zynga, I want to say a few times within the premium member community, but I've also held a core position, because my motto is, if the stock is acting right, there's no need to let go of all your shares. Yes, you want to take profits along the way, but obviously the goal and the objective and agenda is to let your winners run. Now, I want to say this, right? So I don't know if you're long, I don't know at what point you got into this particular trade. But for us, the first time the stock came in our radar, it was trading in the low threes. So sitting here at 626 with the recent high of 665, we've almost doubled our investment on ticker ZNGA. And if you haven't doubled it, you're at minimum up 50, 60, 70%. So it makes no sense to unload a stock that is still performing and behaving relatively well. Now, I always say, like, stocks have, one can say, and this is kind of taken from Wyckoff, 4 stages, right? You have your stage of accumulation, and they all sort of look range bound, right? You have accumulation, you have your mark up, you have distribution, and you have your mark down. So with Zynga, if we are to take a rule or a lesson book out of Wyckoff, you can see from November 2018 to April of 2019, you had your walk up period. Now the stock is kind of ranging, it's basing, it's what I like to call resting. I mean, it's had 100% move in under a year. Give it some time, give it a breather. You're gonna have profit takers. Now it is trading sideways, and similar to what I stated with Disney, and you can look at the beginning videos I've done on Disney, and now it's starting to act, but I'll recover that perhaps another day. Anyway, so with Zynga, stock is actually basing to do what, in my opinion? Make that next leg up, that next move up. Now, I had a year-end projected target of around $8, and I'm actually still going to stick to that target, because right now we're sitting at 626, so that's not a huge upside from current levels. And considering the IWM is actually acting the way that it's acting, considering the SPY and the Dow and the QQQ continues to make all-time highs, I'm still going to put that bullish bet on Zynga, ticker ZNGA. So am I bullish? Yes. Am I still long? Absolutely. Do I see an $8 price target? Yes, but you don't go from $3 to $8, right? When the stock first got on our radar, you don't go from 3 to 8 overnight. It takes time, and the fact that we're sitting at 626 from 3 in under a year, I think that's a phenomenal acting stock. So I'll keep it there. Don't want to drag this video on. So yes and yes, still long, still bullish. All right, so let's wrap it up and round it out with ticker CCXI. This is actually an hourly chart. We're just going to focus in on this gap up here and today's trading or price action. Anyway, stock is up huge on the day. It's up north of 300%, which is completely phenomenal in one day. So huge congrats to the bulls and anyone that's actually in this trade. Closed at 30.94. The high of the day clocked in at 36.74 and the low clocked in at 26.76. So we're kind of somewhere in the middle of the high and the low. I would say gravitating a little bit more towards the low of the day. You can see the huge spike actually happened in early morning trading, but if you look at volume, you can see folks were actually unloading for the first 3 hours of trading, with minimal buying coming in within the last 2 to 3 hours of trading, and we're also trading sideways. So similar to what I indicated with ticker SRNE, if you're long looking to get long, you want to get a part of this action, I would suggest that you pay attention to exactly how the stock opens up. I cannot stress the importance of the open and close, right? So we closed at 30.74. If tomorrow you wake up and you find that we're actually trading down and we open up below this close of 30.94, I would more than likely believe the stock is actually going to retest or at least drift towards the low of 26.76. If the stock actually tests and breaks that level, then look out. You're probably going to get some unloading and a steep selling. Now, I'm not saying that the gap of around $8.12 is going to be filled right away. I think it's going to take some time for that to happen, but do expect at some point for ticker CCXI to sell off to the tune of around 20 to perhaps even 50%. Again, it is up around north of 300%. You're going to have your profit takers. You're going to have people that unload. So if you're looking to get long, you want to bear that in mind, okay? So that's my take on ticker CCXI, and we are going to wrap it up and round it out there. Tina here, once again from ShortMeTina.com. If you enjoyed any portion of this video, I'd like for you to do 3 things for me. Yes, just 3 things for me. 1, comment in the comment section. Let me know, what did you think about my analysis? That's the first thing. 2, I do videos literally every single day, no matter where I'm at in this world. I can be overseas in another state. I can be working, not working, no matter what I am doing. I am constantly doing a video when the market is open. So if you want to ensure that you don't miss any, subscribe to our YouTube channel at ShortMeTina. And the last thing, my friend, I'm going to make it really quick. I've been trading for a long time, well over 15 years, closer to 20, north of 2 decades. So if you think you can learn anything from me, then definitely head on over to our website, ShortMeTina.com. Sign up, become a member. Thank you for listening, and as always, thank you for listening.